The world's most powerful currency, the US dollar, is suddenly losing its grip. What's more surprising is that the US President Donald Trump seemed to have welcomed it. But why? And what happens if the dollar falls further? Let's decode. Let's start from the history first. For decades, the US dollar hasn't just been America's currency, it's been the backbone of the global financial system. Picture this: oil trades in dollars, global companies settle deals in dollars, and governments hold their emergency reserves in again the US dollars. This dominance goes back to 1944 Bretton Woods system when the dollar became the world's anchor currency. Even after US abandoned the gold standard, the dollar's power remained intact. Even today, as of the third quarter of 2025, nearly 57% of global foreign reserves are held in US dollars, more than half of the world's financial safety net. After a turbulent 2025, traders expected stability once Trump's early tariff shocks faded. Instead, the dollar slid sharply. Late last month, it touched a 4-year low against a basket of major currencies and fell to multi-year lows against the euro and the British pound. In just 1 week, the dollar dropped nearly 3% before a small recovery. In currency markets, such moves are very rare and usually signal deeper stress. Analysts caution that the rebound in the US dollar may only be temporary. Donald Trump's reaction explains a lot. He has long argued that US dollar is too strong and openly accuses rivals like China and Japan of keeping their currencies artificially weak. Since returning to office in January 2025, the dollar index has fallen around 12%, and Trump doesn't see that as bad news. In his view, a cheaper dollar gives American exporters a major advantage. There are clear winners in this scenario. A weaker dollar boosts exports, supports manufacturing, and even helps multinational companies earn more from foreign markets. It also eases pressure on borrowers, including countries and firms that owe money in dollars. But this comes at a cost. Imports become more expensive, pushing up prices for everyday items like electronics, clothing, cars, and household appliances. Even American factories feel the pinch because many of them also rely on imported components. Overseas travel becomes very costly, fuel prices rise, and inflation hits consumers directly. Markets are also reacting in an unusual way. Investors are increasingly pulling out of US stocks, bonds, and the dollar simultaneously, a trend that is being called the Sell America trade. Traditionally, during periods of uncertainty, investors rushed into the dollar as a safe haven. This time, they are doing the opposite. Another key factor is the interest rates. The US Federal Reserve controls rates, and a higher rate usually attracts foreign investment, strengthening the dollar. Now, Donald Trump has repeatedly criticized Fed Chairman Jerome Powell for being slow to cut interest rates. He is now backing Kevin Warsh, who supports lower interest rates also. And the clearest warning is gold. When trust in currencies fade, investors turn to gold, and prices have surged dramatically in the past few months. Gold recently touched record levels near $5,000 an ounce before pulling back. The global implications are massive. Foreign investors currently hold about $70 trillion worth of US assets, nearly double what they held a decade ago. As the dollar weakens, especially European investors are now cutting back their exposure to avoid losses. This isn't just about trade competitiveness anymore. It's also about whether the world still sees the US, the United States, as the safest place to park their wealth. This is where the real risk lies. Trump views a weaker dollar as a strategic tool. Many economists, however, see warning signs flashing. A falling dollar can point to inflation fears, rising debt, policy uncertainty, and doubts about long term direction. A single 3% weekly drop may not be very disastrous, but if the world's anchor currency continues to lose credibility, the shock waves could spread far beyond the United States of America, shaking global markets, governments, and economies. What do you think about this? Let us know in the comments, and like, share, and subscribe to ET Now for more such news and views.
If you like this video, then like, share and subscribe to ET Now.